This is Matt Russell, and welcome to the DailyFX Forum.
So here are the four pairs that I will be discussing this evening: the Euro Pound, the Aussie Kiwi, the Pound Swiss, and the Euro Swiss. So let's go ahead and pull up the charts. The first chart is the Euro Pound. If you recall during yesterday's report, let me zoom out here and give you a better idea of the fib levels that I did add to the pair. I mentioned how we might use that 61.8 as a tentative basis for a long trade, and we can see that prices did come down a little bit. The way I wanted to set up this trade is placing the stop just beneath the low of this candle wick right here, so that would be just beneath that 84.60 area, and wait for prices to come down close enough to that level to justify a favorable risk-to-reward ratio on entry. Prices did come down to the actual 61.8 level, which is located at 84.95 area, penetrated slightly and then closed back above it. So still the same thing would hold. It really depends on your individual risk parameters right now. So that's the trade I'm looking for. Long trade against that 84.60 low of this candle wick right here. The next chart is the Aussie Kiwi, and if you recall during yesterday's report, I added this channel line here. I also mentioned that I was not very confident in the channel line, but we could see that it did work certainly as resistance here, as prices did sell off heavily from that upper resistance line of the channel. So if you're in the trade now, I'd just continue to hold, maybe look to take profits in the middle part of this channel, maybe around the 124 figure or maybe around 123.50. But again, it was a low confidence trade idea, so if you did not enter, I would suggest just waiting for prices to come and test the upper line of the channel here, which should act as resistance moving forward. The next chart is the Pound Swiss, and not much has changed here. Still just waiting for prices to come down and test the longer term support line formed by the late 2008 low and the mid-March low. I also mentioned a shorter term trade idea, which would be a double top right here, and this price point is just above that 81 figure. 181.10 is the high print right there, so we might look for a double top to form here. However, with that being said, I don't mean that we should enter right at 81.10 if prices do get there. What I would like to see is prices come up to that area, maybe breach the 81 figure slightly, and then have a sell-off, wait for that candle to close, and then enter at that point. So that's a trade idea that could certainly materialize over the next 24 to 48 hours, and something we should keep an eye on. The last chart is the Euro Swiss, and this is the daily chart. Let me zoom out here, get a better idea. This is the longer term resistance line that I've been using for the past several months now. We had the break above, and then prices did come back for a back test. It wasn't very clean at all, as we can see penetration as well as a few daily closes beneath the line, but we did have a sharp rally off that back test. It was a successful back test, but it just was not very clean in terms of finding a good risk reward entry. So moving forward now, I would just use this simple support line as our reference point, and we'd wait for prices to come down and touch this level. Right now it's located just beneath that 152 figure, so that's a price point we can keep an eye on. We'd look to enter maybe at the line or just a few pips above the line, with a stop maybe 50 to 75 pips beneath the line. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.